this is it. Dope from the fly kid. The ice mic is back with the high bit. Suckers you lost, the players you're not. Gangsters you ain't, you faint punk if you ever heard a gunshot. Yo, the pusher, the player, the pimp, gangster, the hustler, high roller, dead press folder. It's cold lamping like a black king on a throne. Evilly, turn up the microphone so I can ill and break on the rolling tape. Another album to make, great. Islam turned the bass, kick up a bit. Hype the snare, now I got a place to sit and ride the track like a black Mac in his lack. Hit the corner slow where the girls are at and kick game the way it should be done. How you gonna drop science? You're dumb, stupid, ignorant. Don't even talk to me. In school you drop math, science, and history, and then you get on the mic and try to act smart. Well, let me tell you one thing, you got heart to perpetrate your bait, so just wait till the press shove a mic in your face. Or you meet Boogie Down or Chuck D, Stetsasonic or the Big Daddy, and they ask you about the game you claim you got. Drop science now, why not? You start to sweat and fret, it gets hot. How'd you get into this spot? You played yourself. Yo, you played yourself.
Hey, it's Elaine. This is episode 347 of the Orange Pill Investor. And today we're going to talk about not playing yourself with this MicroStrategy trade. I got the inspiration from this one from a guy that I follow on X, TradFi trader, and he was posting his updates. And he's like, yeah, I lost, I don't know if it was 3,000 or 5,000 or whatever, how many thousands trading Tesla this month. And he was playing a little bit of like a revenge game. He's like, all right, I got to place a couple of trades and try to get back even. And my response to that was, Tesla is going to be one of the most profitable companies to own over the next 2 to 3 decades. And you found a way to lose money trading it. And I don't, I don't know if that's sunk in. I hope that slapped a little bit of sense into him, because there's I can't remember who it was, but there's some famous traders, and one guy was like, you know what, I don't even place a trade unless the market just drops a bunch of money in my lap, meaning it's quite obvious to this guy that the trade is going to be profitable. And the thing that I like about selling options is that you don't have to be a super skilled trader like a Josh Mandel. And every time you sell an option, you're just chipping away at your cost basis a little bit. And you could even just call it like trading for dummies, but every time you reduce your cost basis, it just gives you that little bit of decreased chance to fail, which is another way of saying increased chance to win. Now, you may not win as much as somebody who wins the lottery and just places the trade at the exact right moment. Like if somebody's so skilled at reading the charts or whatever that they just YOLO'd in here with long calls 6 weeks out, and then they close them right here, that's great. But I don't know that anyone can even do that without a shitload of luck. So I made a list of ways that you can lose money trading strategy. And the reason why I made a list of reasons, the ways you can lose money, is the Super Bowl is fresh in my mind, and there was a famous football coach. I wish I could remember his name, but it might have been the guy that came up with the West Coast offense. But his when they asked him like how did he become a winning coach, he basically just said, "Look, I imagine all of the things that could lead to the worst possible outcomes, and then I just don't do that." The obvious example to that would be like, fake punts or going for it on 4th down, like inside your own 10-yard line. That's one of the worst possible things that you could do. And if you had to imagine a future scenario of losing a game like, I don't know, 100 to 7 or something. Dumbass decisions like that would be part of it. So it's kind of a variation of reverse thinking, or which is you can increase your success in any project, and this is applies outside of trading as well. If you imagine your project failing, instead of trying to imagine how it succeeds, and then everyone's brainstorming about ideas, you imagine, okay, if this project fails, what would be the decisions leading up to that failure? And then you just don't do any of that stuff. And there's been some studies that have shown that trying not to fail increases your chances of success more than trying to succeed. So I'm going to give them a couple of my assumptions, and if these assumptions don't don't come about, then none of the strategy trade makes any sense anyway. So my assumption will be that the Bitcoin bull run will continue through 2025, meaning we'll get, in March, February, March, we had what we went from 50 to 70. Okay, that's pretty cool. That's like 40%. And then we went from, let's just call it 70 to 100. So we went up 50%, 40% and a 50%. So my basic assumption is that in 2025 we will get at least one of these. Bitcoin will continue to do what Bitcoin does, and we will, at least see 150 or 200. Now we could get two of these events. I don't know, we could get 10 of them. But for my theory to kind of be taken advantage of, I only need this to really happen once. And it could combine with any of the other strategy catalysts that we've talked about. So S&P 500 inclusion, some historic Q1 surprise earnings. Like if any of those things happen in conjunction with a Bitcoin run, then strategy is going to have another event that looks like this. Now I hope it happens a couple of times, 3 times, but you can see that this March pre-split, it went from like 500 to 2000. So like a 4x in 5 or 6 weeks. And then it took 6 or 7 months to unwind that. I hope it doesn't take 6 or 7 months to unwind this one, but we had a November pump. Again, if you want to go down here from 125, then September, October, November. So over 3 months, it went from 125 and 4x'd. If you only want to go back as far as November, then November 4th, we had a 2x in 2 weeks. So that is my baseline assumption, is that we will get some variation of a large move. I don't know if it's going to happen in 4 weeks or 4 months. We could get some kind of, if the market starts front running S&P 500 inclusion, let's just say in like March, we could get a slow grind all the way through September. That's possible. I would prefer a nice big candle, but if it's kind of a slow grind over 6 months, that's kind of still fine. Because you just have to be able to exit your position at a profit at some point. And when I say exit a position, I'm generally talking to the option owners. If you're just hodling shares and this is a 10-year position, then you're really not probably even considered a trader. You're probably an investor. So just double check something real quick. Dr. Van Nostrand, I think it could have been Bill Walsh. It very could have been, because I think he's the father of the West Coast offense, right? Um, yeah, so if you're just diamond handsing and you can just straight up Bitcoin hodl your strategy shares for 10 years, none of this probably matters. And because all of the things that I'm going to talk about, how you can basically wreck yourself That was the other potential, intro song was "Check Yourself" by Ice Cube. Um, but I went in even a little older before Ice-T started playing cops on TV. So, first assumption, Bitcoin has at least one good run in it left in 2025, and we'll see some kind of mania. We'll see some kind of thing like this, and let's just look at the implied volatility chart. And I'm assuming that implied vol, right, was 80, went to 160, doubled. We had implied vol 90, and that's like 2.5x. It went to 226. So implied vol is going to spike. If you're tracking IV rank somewhere, it'll probably get pegged close to 100, anywhere from 70 to 100. There will be signs, I guess is what I'm saying. So if that happens, then it's going to be very easy to profit on the strategy trade. But here are the ways that you can snatch defeat from the jaws of victory, trading one of the most profitable uh, stocks in the history of the market. If, if, you know, if that comes to be. The obviously first one is, short naked calls. If you are exposing yourself to unlimited losses, that is a serious recipe for disaster. Now, I know my guru, I guess, Tom Sosnoff, he does it all the time. He sells short strangles just as a matter of business, but his positions are very small. And so I don't have the biggest account in the world, but if a large percentage of my account was short naked, then I would be asking for trouble. So a small percent, okay, whatever is manageable, I suppose. Like I would I would definitely be worried about strategy 2 or 4 or 10xing within a very short period of time. So that's number 1. Number 2 would be excessive use of margin. You could say margin in general, and that's why I took off all my margin positions. So Tasty Trade is telling me they want to give me $500,000 in frickin' buying power. And that's insane on something as volatile as strategy is. So just because I think strategy is going to 750, 1,000, 1,500 or higher doesn't mean that it can't go from, 200 to 100 before it goes to 500. So it doesn't do you any good to be right at the wrong time. If you're over margined and you get liquidated, right? If you FOMO'd in at 500 and then you got liquidated at 300, it doesn't matter if 6 months later strategy's at 1250 because you already played yourself and the casino took all your money. So that's number 2. The third one is short dated options, and that's what got this guy into trouble with Tesla. So, geez. Unfortunately, let me see this call that I've been expecting. I'm gonna go on mute for a second. All right, cool. I'm back. Hopefully I didn't dox myself this time. Last time I took a call, I thought I ended the stream and ended up having to delete that video. All right, so I'm going to have to make the rest of this one quick because I've got to haul ass to the dealership soon. All right, so shorter dated options, right? If you FOMO'd, even if you just made the worst possible decision on options, if you FOMO'd in when this was pre-split 2000 and I don't know, the top of the options chain was maybe buying like the 5,000 strikes or something. Even if you were buying those farthest out of the money strikes, you still didn't lose money if they were a year out because they went frickin' almost in the money in November. And you probably would have ended up being able to sell these for profit. However, if you had ones that were a week out, 2 weeks out, and this guy was trading ones that were probably under 30 days, even 6 to 7 months out, you're probably getting wrecked here. So not giving yourself enough time to be right, that's a problem. You really don't have that issue with shares, but um, you know, for the people who are taking on leverage, you do have to you just have to find some place in between here and expiration to make some money. You don't have to hold to expiration. And I'll get to it a little bit more, but I would even go so far as to say you should almost never hold until expiration. I know a bunch of people held until January to exercise things, and they had very good reasons to do so. A lot of tax ramifications with that, and that's completely fine. But as a strict trader, it's almost always going to be beneficial to close that trade for a profit than holding to expiration and exercising. Not to mention the danger of the stock going in the other direction at the last minute, right? If you were in the money on your 400 strikes in November and they expired in February, now they went out of the money again. So you can be in the money and think that you've made it, and now you're just going to hold the expiration and exercise those options. But what if the market doesn't participate in your fantasy? So that's why, in general, I don't have any long calls under 90 days. And if I have some that are at 180, once they get to 90, I roll them out to at least 180 again. Just a little hack. If you can never have an option expire worthless if you never hold it till expiration. It's always going to have some kind of value. I mean, I guess the price could plummet so much that it just the value goes down to a penny. But for the most part, if you don't hold options into the under 90 days when the theta curve becomes most advantageous to the seller and disadvantageous to the buyer, then you don't have to suffer those large theta curves accelerating. The other thing that you can do to screw up this trade is FOMO at the top and panic sell at the bottom. Right? If you had shares, you could FOMO in at the top here. And as long as you just diamond hands and just gut it out over the next 7 months, then you're good to go. You're able to double your money in 7 months. One of the last ones that I thought about, and this is probably the trickiest one, is not taking profits on your options. And this is where I was going when I said, for the most part, option buyers are not going to want to hold till expiration. You're going to have to hold through that last 90 days when theta is just relentlessly accelerating. So you're already hamstringing yourself um, in that sense. but you're also ignoring these implied vol spikes. When implied vol is skyrocketing, this is when your long calls are actually, so like the market prices are always fair. So I don't want to say that there's like an unfair pricing to them, right? The market determines the price. But I guess what I'm saying is this is the most advantageous point to close long calls because Vega is pumping up the value of those long calls um, additionally, like on top of just the price. So when I was talking about a slow grind up, like if you just get this night, just a real, just slow grind, like implied vol might not skyrocket. It might kind of pump a little bit. We might get these little smaller peaks here, and any of these could be, sold for profit, give you a little bit of a boost. But these giant peaks here, this is when long calls can be sold for their max, and this is when covered calls can be sold for their max. Sometimes it takes a month or two for implied vol to wind down. In this case, we've got like implied vol rocketing up, and then within a week, it had crashed back down again. So this was a very short-lived window, and there's no guarantee if it's going to be a longer or shorter window. And here's a long, this is the, yeah, long call. So I put this in, this is the July 18th, 1080s, right? It's possible to profit on a 1080 strike, even if the price never gets to 1080. Let's just say that the price goes to 750 and that's it, right? Well, you can make 300% profits here. Or if you keep holding, your percent profit drops. And then finally, it's under 200%. And then it's under 100%. And then it's 50%. And then it's 30%. And now it's a loss. So if you're holding 1080s, and look at this, when does the 750 become unprofitable? Theta is rapidly accelerating under 90 days. So this last 30 days, boom, you took an extremely profitable trade and turned it into a loser by just holding it under 90 days. Now, I think some of the people that had the Januaries in 2025 were so in the money, like just hundreds and hundreds of dollars in the money. They had like the 25 strikes or the 50 strikes or something just ridiculous. And the price was, hundreds. So they weren't necessarily risking probably this happening, but I mean, to a certain extent they were. I mean, there's no reason why some black swan event couldn't have happened and then all your profits go to shit. So acknowledging that you will have to take profits on an option because it has an expiration date. If you don't want to take profits on shares ever, you're fine. You're welcome to do that. And if you just want to live on a margin loan or something forever, or sell covered calls when certain environment happens, or just leave it in a retirement account forever, you're absolutely can do that. But you don't have that luxury when you own an option that has an expiration date. So over this 6-month period, you have to sell. So you should have a plan when you open that contract. When will I take profits? For me, it's going to be when I see an implied vol spike, and that should coincide with some kind of rally. It can be, selling for profit here, maybe you double your money or 5x your money is fine. You don't have to 10x your money and 20x your money. So you're going to have to kind of be at peace with not hitting the top. It's fine to take profits at 350 a share or 390 a share. What you don't want to do is let something that's profitable get too close to expiration, and then we get this market correction, because you should always expect a correction after a rally. That's that's not just, oh my god, the ATM sunk the price. Like, back here in March, no one was really complaining about the ATM, but it's still 4x'd and then it went down 50%. So that, support and resistance are real things, and they happen. So you can't just hold that option forever and get paralysis and never sell it at a profit. Just pick anything in the green and you can't screw this up. But if something goes in the money and you're like, "Oh, yay, I won. Now I'm going to hold it until expiration," then you can absolutely turn that winner into a loser. And the other thing is just, I think strategy is a multi-decades play, but I'm an orange-pilled Bitcoiner, and only Bitcoin is going to last 500 years, 1,000 years, whatever. Strategy is based on Bitcoin, but it can't be forever. It's I think they'll be fine, without Sailor necessarily. He's gonna have a pretty good transition, but, I don't know if it's 50 years or 100 years. I mean, anything can happen with the world government or United States. If we get a dirty commie that takes over and just decides that, the government's gonna absorb all the publicly traded companies into the government, and now the people supposedly own the means of production. You just can't predict any kind of weird shit like that from happening. So, no matter how bullish I am on strategy, the only company that over the next 30 years that I would even put in there, in a class with strategy, is Tesla. There might end up being some others, but I'm not aware of them, but I may not be aware of them because 'cause I'm not looking either. 2 is enough for me. Um, but yeah, any type of black swan can screw this up, and so I think it's, a decades long, trade, but I'm not such a deluded fanboy that I think it's a sovereign instrument like Bitcoin. It's not. And just being based on Bitcoin is not enough to make it Bitcoin. So, those are all of the ways that I came up with to, to avoid, pitfalls, because we get tagged in a lot of posts and it's like, "Oh, the point one delta, or should I do at the money? Should I do 10% out of the money? Should I do 10% in the money? Uh, why do you, you know, why am I buying the 1080s and somebody else is buying the point 0.6 delta or the point 0.3 or whatever?" None of that I don't think really matters, because every bullish strategy, as long as you don't fuck it up somehow with all of the ways that I listed, are going to be profitable. If my basic assumption is true that Bitcoin does at least one more Bitcoin thing in 2025, and MicroStrategy gets some kind of mania event along with Bitcoin. Actually, they only really need Bitcoin. They don't need anything else to happen, right? The S&P 500 doesn't need to happen. It really just needs Bitcoin to happen. So if Bitcoin beat Bitcoins in 2025, then I say we get at least another one of these nice, beautiful, green months to take some profits on. So if you own profitable options and you overstay your welcome, you can turn just like I did. I only took about 10% off the table in November. I wish I'd taken it all off the table and then just bought back in here. But I should have taken, like, I don't know, 50% of my leverage off the table or more here. Like, this signal couldn't have been any clearer, really, I don't think. I don't think you have to be super skilled day trader to fricking look here and be like, "Oh, implied vol just had historically blown through the roof. It's time to take some profits on leverage." I think that's pretty obvious signal there. I guess this is my cue for not financial advice, but, I got to haul ass. Let me just take a quick look at the chats real quick and see if there's anything I have to cover before I drop. Nanya says down 20% on my 1080s already. Yeah. I hope you're safe with the Junes. I got a bunch of Junes myself. Bitcoin, not crypto. Got to take that 500,000 margin and YOLO industry. Yeah, exactly. Oh my God. I wonder how many 1080s I could get for this Friday. Mark says, I remember those long calls were getting repriced up almost every day. Yeah, exactly. It was just, and I FOMO'd into a bunch of them too. I had a bunch of stuff that expired in January and February that I either closed for a loss or, just tried to salvage what I could out of them and just rolled them out to April and July-ish timeframes. Soldemar, curious, does Tasty Trade treat strategy and strike as concentration risk? Built a strike and short. Okay, built a long strike and short strategy 900 so 900 put position, and surprise margin requirement is quite low with my broker. Huh. I don't know. I didn't even know you could trade strike on Tasty yet. MSTR. Okay. Oh shit. Okay. Well, there's no options yet, so I can just buy shares. What's it trading for? 89. Sweet. Yeah, so everybody who bought in at 80 has already up over 10%, like overnight. That's awesome. I don't know what the concentration risks are, so it's going to be interesting to watch. Mark Sinclair, Nitha, do you usually sell calls on your entire strategy position or just a portion? So I used to sell it on every single position. So a year ago, before I saw Quant Bros 1, I would have, let's say on, 3,000 Delta, I probably had like 30 covered calls on. But I'm just biding my time with this low IV environment, and I'm just waiting for this next rally. Once we see implied vol spiking again, and we see some kind of rally to, I don't know, 500, 750, 1,000, I will be adding my covered call positions on the way up, and I will be closing these longs, hopefully for profit. I think my only long calls that are still in profit are these December 530s that I bought 100 days ago. I'm taking it in the shorts on basically everything else. But yeah, right now I'm kind of doing like a 60/40 portfolio, meaning like about 60% of my positions are covered, and that other 40% is will become covered as implied vol pumps and as strategies price pumps. So that's kind of what I'm basically bag holding on like 40% of my portfolio. Dude Fist Ivy Spike is coming maybe this month. Fingers crossed. I'm hoping that happens. And I got to haul ass. Thanks everybody for tuning in. I didn't even have time to trade, but the price hasn't really done much of anything. So I could potentially close these for 50% profit. But not quite. I don't think I need to rush into that. So as long as we're just kind of trading sideways, I'll just hold on to these positions. So we'll either do something tomorrow or not. What strikes do I have? Got the 345s. Yeah, we'll see. All right, cool. Be good, y'all.